Have you ever wondered why only a few people like Warren Buffett and George Soros have become billionaires investing in the stock market, while others have suffered huge losses? In this video, we'll discuss their unique strategies, how they achieve substantial investment returns, explore why implementing some of their strategies could be beneficial for your own investment journey, and if you stay on to the very end, I'm going to give you my 2 powerful techniques that helped me increase my portfolio by 35% in just 1 year. Let's dive in. Strategy number 1. Before we dive in, begin by reflecting on what you want to achieve financially. Your objectives will depend on your life stage and ambitions and desire. Younger investors tend to focus more on growth and long-term wealth building, while those closer to retirement typically prefer income generation and capital preservation. Remember, investing is a marathon, not a sprint. Here's what beginner investors fail to learn. First, let's talk about the money you should not put in the stock market. Do not invest money you'll need in a few years. Always follow the 50-30-20 rule. 50% of your income goes towards needs like rent, groceries, bills. 30% goes towards wants like fun stuff, dining out, and 20% goes towards investing. Warren Buffett said in an interview, only buy something you'd be happy to hold if the market shut down for 10 years, at a minimum. While the stock market will almost certainly rise over the long run, there's simply too much uncertainty in stock prices in the short term. In fact, a drop of 30% or even more does happen. Stock market volatility is normal and should be expected. If you can't invest for long term, do not go into investing. If you live paycheck to paycheck, investing in stocks might seem like a dream that will never come to reality. But don't panic, you can start small, and even allocating 1% to stock can yield good results. The important thing is to get started, so your money will grow over time. Pay close attention to strategy number 2. Investing involves risk. Some stocks are like roller coasters, others more like a gentle cruise. Assess your comfort level with risk. Higher potential returns often come with higher risk. Warren Buffett said in an interview, "Don't let fear or greed be your guide. I've been in the financial industry for many years. I know that everyone's risk appetite will differ slightly. Most people can withstand losses and others have a tough time even when they lose a relatively small amount of money. When you're investing in the stock market, you're absolutely investing in public companies. If you've been in business, you understand that business does not always go as planned. Many times there are surprises, even with the bigger companies. This is found to be true. Even though you believe you're investing possibly in a great company, there's always something that can come up. Ask yourself, would you be comfortable if the stock price dropped 20%? These questions are important because certain assets tend to be more volatile than others. Let's continue. Strategy number 3. There are different accounts for different needs. Traditional brokerages offer more control, while robo-advisors handle the heavy lifting. Research and choose a platform that suits your budget and goals. These are several financial firms that offer brokerage accounts like Fidelity, Vanguard, and Robo-Advisor. As a long-term investor, I prefer Robo-Advisor, which is best for those who have clear, straightforward investing goals. Remember, opening a brokerage account and depositing money is not investing. This is what new and beginner investors fail to understand. However, the final step is to make a purchase. Strategy number 4, make it more easier to understand stock investing. Let's discover Warren Buffett's favorite investing strategy. Strategy number 4, build your portfolio. Imagine facing a dragon with just one arrow. Not the best plan, right? The same goes for investing in stocks. Don't put all your eggs in one basket. Instead, gather a diverse army of stocks and funds, spreading your risk across different industries and companies. Remember, a strong diversified army conquers even the toughest challenges. As someone who has been in the investing world, I'll recommend a goal-based investing approach because it allows you to create separate portfolio buckets for your investing goals, each of which has a unique goal amount, time horizon, and risk tolerance associated with it. Individual stocks can be exciting, but for beginners, consider diversified options like index funds or ETFs. These spread your risk across multiple companies, reducing volatility. Here is a crucial part of George Soros' investing strategy. Strategy number 5. George Soros said in an interview, "It's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong." Knowledge is your most valuable treasure in this market. Seek it out in books, articles, podcasts, and even wise mentors. What made Warren Buffett and George Soros successful investors is their ability to learn every day. Warren Buffett spent most of his time reading, which helped him to explore. Remember, the more you learn, the better your decisions will be. So arm yourself with knowledge, for it's the key to unlocking financial success. Here are the 2 powerful techniques I used to increase my portfolio by 35% in just 1 year. Technique number 1. Set your expectations. You can never be sure what you're going to make from the stock market. People have made millions. Warren Buffett has made billions, while others have suffered huge losses. The golden rule is never to invest more than you can afford to lose, and don't attach your emotion to your bag of stock. There are a lot of graphs that show the historical returns of the stock market. You'll notice a general upward trend, but one that is spiky with slumps and uplifts. This illustrates how a long-term investment is the best way to generate a return on the stock market. Strategy number 2. The market, like any adventure, has its fair share of twists and turns. There will be sunny days and stormy nights. But remember, true adventurers don't give up at the first hurdle. They stay the course, weather the storms, and emerge stronger on the other side. So be patient, be persistent, and trust in the long game. Investing is a journey, not a destination. So enjoy the process, learn from your mistakes, and celebrate your successes. With dedication and the right approach, you can be well on your way to achieving your financial goals. Remember, from the beginning of this video, I talked about how you can implement these strategies to achieve a good return in your investment journey. Go watch this video where I reveal how you can actually use these strategies to achieve a good return on your investment with just a $100 startup. Also check out this other video where I shared 8 life-changing money habits for over 40s. Go watch them now.